The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everybody. Basil Chapman, Tiger Technicians Hour on this 19th of February, the very day that we will have a webinar on the match and mismatch between the 1928-29 period, socioeconomically, politically, financially, just in many, many ways. What is paralleling? How come we can even think along those terms? We'll be discussing that tonight. Where? In the webinar. Let me just go to the page, the front page, right there. Free newsletter and webinar by Basil Chapman. Get a free month of the opening call and get access to Basil's subscriber-only webinar on February the 19th, the 1929 market then and now. There it is, 1929 market. Look at that, the glass dome ticker. And it's ironic that almost in every instance of major market tops, I remember in 87, I remember them moving to a new building, the New York Stock Exchange. I remember in 2000, it was October of 2000, I mentioned in my newsletter, my Market Line newsletter, that within 6 months we should be making a major top in the over-the-counter OTC. Let me show you something very interesting here. If I can find it, I'll lean over, get it over there. Oops, grab the wrong thing, slide it over. Of course, too many things going on, a lot of charts up there. Let me show you something very interesting. Look at, there it is. All right, let me slide it across. I'll be discussing aspects like this. Here is the NASDAQ, the Index 100. It goes merrily along from 373 in July of 1994. It goes to peak ABCD. What is an ABCD? I'll show you right here. Two things at once are right there. You see that little square? If you're looking at Tiger TV, that happens to be the 10-minute S&P E-mini chart. It takes you from a low bar, most identifiable low, and merely goes four successively higher peaks. Each peak gets labeled peak A, peak B, peak C, peak D. At D, whoosh, you can very often get a very sharp decline, and look what happened there from that peak D. So let's get rid of that. So you go one peak D in a buy signal to buy mode. You pull back, just barely pull back. Start brand new A, B, C. What do you go to? D. Aha. Start a brand new buy mode. Now the third time, very often, not only do you go to a D, but you go to an E or even an F. Well, the third buy mode goes A, B, C, D. It goes to an E, extends in what I call an instant restart, but the MACD and stochastic was still very strong. So it goes E. Lo and behold, it goes to that parabolic F right there, March of 2000 at 48.16, and it gives back a little bit. It gives back from 4,816. It just gets rid of the 4,000 points. I mean, what's 4,000 points amongst friends? And it comes back down to 825 in October of 2002. I'll be discussing what's the difference between that particular period and this, but what are the similarities, as well as many other things. So let's just get that out the way, whoops, and mention that there's still time. I'll be doing this at 6:30. You'll need a little time just to be able to familiarize yourself, to be able to get online and be able to do this. But even if you don't, if you at least sign up, it'll be archived. You'll be able to get the archive of this and be able to review it many times. There's just so much information. I suspect you will be wanting to archive it. But what is going to be absolutely fascinating with me is I'm going through the fundamentals, and then I'm going to go through the technicals. And the technicals, what we'll look at here in a moment. First of all, let's just say the E-mini is right now only down 75 cents after a very sharp pullback. Well, reasonably sharp for these past few days. Now, nothing like the moves to the upside. But in fact, the stochastics at 97%. That is absolutely bravura action. That's what you want to see when you get to a Chapman wave buy mode. So that's leg D, but it's only it's peak B in both the Dow and the S&P cash. So this is going to be fascinating how it unfolds. My thinking right now is that next week or the very first couple of days of March, that's where we're going to get at least a pretty decent pullback, okay? That's not the big one. That's nothing to do with the big one. Big one, you got to reserve for later on. And we'll see if we can even time that. I mean, you know, I'll talk about timing in a moment. Actually, I wonder if I've even got that. No, I don't think I've got that chart. So let me show you something else here. The weekly chart is in leg C. So now that's going to be very interesting because that means you'd have to take an entire week to make a peak C, and you're in a leg C in the S&P cash. That means you have to take an entire week. That means all of next week would have to be with a lower high bar. But wait a minute, if you're only in B in the daily, and that says that within a few days you should be making leg C and then a leg D. Remember in Chapman wave, you look for 4 peaks before you think that something far more serious could happen. It doesn't matter what time frame, because these are just fractals and they just repeat over and over in all time frames. Yes, that's right. It was Pearl Bailey. I knew it was a voice I recognized. Going back to UT in the Den, thought it was Nancy Sinatra. Well, maybe we were talking about different songs, but the song that someone said Ella, I said Pearl Bailey. Okay, so now what we're looking at is the 120-minute chart has made a peak, G/C. It's holding that rectangle formation, and whoops. Oh, earlier on, Nancy and Dino. Yes, absolutely correct. The very first one was Nancy. We recognize the guy as Dean Martin. Hey, sorry to... excuse me, I'm pulling a Dave White here. I digress. That's nice. It's fun because that's, you know, our minds work that way. We try to, we capture things and it stimulates ideas. We're ideas people. So right now, it's saying that the first opportunity to get a peak D, if all of next week is down, it would be the following week. But if next week sees higher highs, then what we'd be looking at is you'd have to wait for another week into first week of March for a pullback to make a peak C, and then you'll get your Ds. Now, I don't want people's eyes to glaze over. Let's just say that in Chapman wave methodology, if correct, we will not make a short-term top, at least until the beginning of March. Okay, so get that out the way. Now let's continue. Yeah, based on the weekly charts, that is. So now let me run the numbers. The Dow is down 33 at 17,996. I had a tough time with that 18,000, trying to clear it to get to the 8104 for leg D in the weekly. The S&P is down just $1.38 to 2,098. The comp index is up 12. This is very important. It's up 12. Nice positive divergence there, 49.19. The VIX index is unch at 1545, which is very interesting. Let's see, we've got the gold right now. Gold is up 7. Oh, it was up much more before at 1207. And silver's up 12 cents at 1639. I was asked about gold. I'll get to gold in a moment. Platinum is down 5, but you've got high-grade copper back down into the 250s again. I just have to look at high-grade copper. High-grade copper, yeah. Peak A, peak B, and it's, peak C, and it's stalling. It's just having a tough time. It's acting okay, but okay in this down. Just like I talk about a flag pattern at the top as a consolidation, a rectangle consolidation. We've got a rectangle consolidation at the bottom here. How consolidated it is, we won't know. But so far, it's holding quite well. Now let's continue, and we want to go to crude oil is down at $2 at 50. Let's see, we've got bonds up 5/30 seconds at 144. I may call it 145, and the dollar is up a little bit. And I do want to go to a couple of things right now. The question of gold, let me just be as succinct as I can. Because gold pulled back, the weekly chart, which was acting very, very well, and the MACD was still acting good, the histogram was positive, stochastic was nicely above, just above 80%, but now it's back down 63% on a weekly basis. It's under the 9-period moving average. That makes 1231 extremely difficult resistance to get through. Today we're at 1222.90. I'm just looking at this and I'm suggesting, let me get rid of this, that the monthly chart is just, it's not a very strong pattern. It's okay for a counter trend bounce. I'd said late last year that I thought that the first opportunity I see was November to December to see certain gold stocks move very nicely. Maybe gold can have a counter trend rally of 6 to 8 weeks, maybe a little bit more, but I'd only call it a counter trend rally, and I really have to stay with that thesis. It's a counter trend rally. The big test will be when we get the IBB, which has made a new high, I believe, into leg D. Yes, it has. Into leg D. It did that yesterday. In the weekly chart, when we start to see the IBB get that next sell signal in the Chapman wave, I suspect that it'll coincide with the NASDAQ. That'll coincide with the IWM. And at that point, I think gold has a chance to at least have another bounce. But IWM is a recovery high. It's in leg. What is it in leg? Leg. 12206, 12205. So this is EB. I'm going to just call it F/B for now. Everything about it looks more like a B, just like the other indices. So with that said, let me go back to the GLD now in terms of the gold trading vehicle. And you'll see that there's this pattern. Chapman wave methodology comes into force here. There's a pattern that I call the falling axe formation. What it looks like is a long handle and then a declining cone, just like an axe. When the price, with lower highs and much lower lows, and then when it turns around and makes a U-shaped pattern and retests the top and breaks out, that says, woohoo, watch out, you can retest the previous high. Wait a minute, it's the exact same thing but upside down. It's so fascinating that most of the time, patterns that work on the upside work exactly the same way on the downside. And in this particular instance, this support better holds right here at 1114, let's call it 1114. A close below 113 in the next 3 sessions would say, watch out, that GLD is going to test the left side low of 112.32. I'll be right back. Basil Chapman, tight conditions out. Woohoo! The Dow's down 28. That's quite a bit long this morning. Let's hope that holds. And unchanged in the S&P.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. sequence. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I had a couple of quick questions, and I will get to it right now. The first one was Facebook. Facebook, right this very moment, what an important candle, because if it didn't make this candle, if it in fact was down, it would have said, M pattern, H pattern goes to an M pattern. Instead, what it's got is that the H pattern has now formed a cup formation, and that can be very powerful. And what happens is if the price, let me just double check here. It went from 73.54, I believe it's a penny lower, 73.45, just a little bit lower. Yes, that means this is leg B, and if this leg closes above the previous left side high peak of the H, which is 78.47, and the high so far today is 78.49. So if in the next 2 days it can close above that, it says it's broken out. And Facebook, for the very first time, is showing the kind of, you see, this rotational aspect is what's so important in this market. Look, the Dow's only down 19. The S&P is up 24 at this particular point. It was down, the Dow was down about 100 earlier on. And we wanted to use this particular pullback because I'm expecting leg C and leg D in the Dow to be a buying opportunity, which we took advantage of. Now, of course, we could get taken out days young. We see these intraday reversals, but my thinking is that I want to stick with the plan. The plan is to see a higher high, to go to a leg D in the weekly chart, and then we will assess where we are, because now, all of a sudden, the Dow was ahead of the S&P. Suddenly, the S&P is behind because it's only in leg C. It needs to have a pullback and then get to D. That delays things a little bit. I want them together. I don't want to get a sell signal based only on the Dow. These kind of sell signals, when they are a little bit more than short term, I think this could be a little bit more than short term, I want all the little ducks lined up very nicely. So that says that Facebook, the rotation into Facebook is very important, because look at the weekly chart. If the weekly chart, and these are the things I'm going to be discussing tonight, not necessarily specific stocks, but why chart patterns are so important, that if you are looking at the correct technical tools. Remember, I've got a huge Sears and Roebuck, the old Sears and Roebuck technical toolbox where I can use a plumb line if I need it, where I can use a stochastic, a MACD. I can get that Phillips screwdriver out if I want to look at a candle. I can use the 9-period exponential moving average. If the weekly chart of Facebook starts to show that the 9-period moving average, instead of resistance, is going back to being support, even if it's the usual just 4 or 5 weeks or 6 weeks, and then it comes back to test the 9-period moving average, that's fine, because it says, hey, if that's the case, we could retest the old high, which had a peak G / B, and go to a C and then a D. That kind of starts to correspond to some of the other things we're seeing. So Facebook right now, very important for 2 reasons. One is it's important because of the sector rotation, as some of the high techs in the sector, some of them have taken off and some of them have been hit so badly with disappointing earnings. And the other aspect that's really important as far as I'm concerned, it gives another focus to how important the 9-period exponential moving average is in the weekly chart, because there was a peak F with a doji candle, with a reasonably not so good candle last month. All of a sudden, it hits the 9-period moving average, and it says, wait a minute, the MACD wants to make that M-shaped pattern. What are you thinking here? The stochastic's at 87%. There's still some internal strength, and we'll see how that pans out. So watch Facebook very closely, because it's starting to trade in the 79.30 to 79.85 area says, my trend has moved to the uptrend from the downtrend, and the weekly chart hasn't changed because it's held that beautiful. Look at this, the Chapman wave inside track support line. Look at that right there. Look, it went right to the bottom. It goes back up above that. So you can get a channel. It's a little mini channel, but this really is a rising wedge formation with a Chapman wave inside track there, support, a Chapman wave inside track resistance over there, narrowing, and we'll just see where it goes. Okay, we subscribers don't have a position in this. We did way back, but in the meantime, back at the ranch, the other question was DB, and now DB is Deutsche Bank, and we looked at it recently. It said, gee, that was really good action, that spike off the low, because I had that as a peak B and it made a peak C, and now it's in a D. And what's important is one of the nicer looking daily chart patterns in the financial sector. It's got a W formation. The weekly chart is showing that it's using the 9-period moving average as a springboard. And what's really important is the left side high of the week of the 5th of December, that 33.20. Is going to be challenged probably in the next few days, because it's already the high is 32.86, and that's really important. The monthly chart has the 9-period exponential moving average of 32.60, something like that. All right, hey, break coming up. I'll be right back. Basil Chapman. This is the day of the webinar. I'm really excited about it. Just so looking forward to it. If you have a portfolio, if you have any kind of portfolio, and you're really wondering, you've missed out on something, you'd like to get in, or you're too heavy, I'll talk about that tonight. Dow's down 20. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. I appreciate this section being brought to us by Think or Swim. And right at this particular moment, we're looking at a very interesting thing. A couple of stocks suddenly broke out after being looking, oh boy, they didn't like Regeneron. Didn't look all that great. At the close yesterday. It looked okay, but it really wasn't great. Suddenly, pop, up 4%, up 17.76 at 423 REGN. And what's happening is it's producing quite an interesting pattern, this kind of rectangle formation, which says it could go back to the old high of 437.44. It goes a little higher. It's the monthly is in E. That is really fascinating. And when I was asked about eBay, look at this, EBAY. Very nice move in the quickest time that you can go from peak A to B to C to D to E. Not the very quickest time, but in a pretty darn quick time, because it was only on the 2nd of February that it was at 52.54. Right now it's at 57.08 in leg E, having broken the downtrend resistance line right there for now. It's the second day. That's very good. It suggests that the weekly chart is going to make a high above 57.94. That'll go to leg C, and that'll be very interesting because all of a sudden the monthly chart starts to build some strength. So this whole rotation says this is what it's been about. It's been a rotation that says if something's just sitting still, move to something else. I mean, that's just the way it's been around here. It's been constant, like for at least the last 3 years, that's been the modus operandi. But certainly from 2010, summer of 2010, you saw this whole thing develop of rotational corrections so that the price of the indexes remain quite high. Hey, talking about that, look at the IWM. The IWM is gone to either an F/B. Everything about it says it should be leg B. It could even be the overlapping wave that's just kicked in, and this is really leg E. Whatever it is, it's way above the 9-period moving average. It's at 122.21, up 17 cents, above the 120.88 to 120.22 support level. And the weekly chart is in leg D, and the monthly chart had that pattern that I discussed over and over. Why was it not long, the IWM? I discussed this. I said leg, body, we're expecting the neck to break out above 120.57, and bam, 67, and boom, there we are. So that's very interesting. And here's the one that is really going to, there are two of them. Look at the RTH. Now, I haven't updated my RTH for a few days, but yep, D, and this is either E. I think this is an E, maybe. I'm calling it an E for now. Everything about it says it looks like an E. If it goes higher, we'll call it an F, and maybe it'll recycle. But what's really important, remember, I looked at this and I said, we're still getting nervous and nervous and nervous, and yet the retail index, I can't even remember who it was over the weekend. I was speaking to, was it this weekend? Speaking to someone about, yes, this past weekend, about the retail index. I said, it's unbelievable that people still keep talking about the Great Recession, when in fact this is the golden period. I'm going to talk about that tonight. You can look at whatever you want, but in many regards, this is a golden age. And the retail index is saying it's the golden age. It's a period of going to excessivity. Everywhere you go, people are buying things. Restaurants. The Boston Globe, in the last year and a half, has gone to a food magazine. The whole globe just about has all these articles on food, restaurants here, restaurants there, and they keep giving these restaurants, new restaurants, good bullish. They keep giving them positive recommendations. I don't know why they do that in the very beginning. It takes a while for a restaurant to settle in. I know of at least 3 restaurants that Globe columnists have spoken about favorably that opened up. They were just terrible, and then they folded. So it's an amazing thing that you should have this number of restaurants in a city like Newton, only 83,000, 86,000 people. And there are, I read something, there are just like over 100-something restaurants. It's crazy. Anyway, back to the story that we're looking at. The RTH index, the market vectors retail ETF, is close to, within a point. The last high was on the 13th at 75.88. That was an all-time high, 75.88, and we're at 75.47. No, we're not. We're actually 50 cents. No, 41 cents away from the 42 cents away from the all-time high. This is an amazing thing. It is absolutely amazing. So let's just go on here, because I want you to do the RTH to discuss it. Let me show you something in terms of history. Look at this. That is one move. Look, if you think Elliott wave, think 1, 2, 3, 4. This could be 5. Now, there are other ways of interpreting, but I'm just trying to be as broad as I can. I'm saying, look, that is a very obvious A peak, a trough 20.02 to a peak D. So the trough is starting off in November of 2008 with a retest in that March period where the Dow made its low. And then it goes to 30, let's call it 34. So let's call it 36 in May of 2010. Pulls back to the 200-period moving average, the yellow line there, brownie yellow line, goes peak ABCD, and right there at in April of 2012 at 42.71, it creates a Chapman wave instant restart. Then it goes ABCD, and remember I said that the third buy mode in a Chapman wave, especially if you get an instant restart, can very often go to an E and even an F. Well, look at the retail index. It went to a peak D at 61.36, in December of 2013. That's when the general market had a top and pulled back. Pulled back, held the 9-period moving average, and whoosh, it goes from 55.12 to the recent high in the 75s. Unbelievable. I mean, that is spectacular action. Stochastic still at 95%. The MACD is making that M formation very good. And the Fibonacci expansion, 300% is stopped. 300% is 75.42. Where is it now? 75.43. Amazing. And look at the weekly. Weekly is still, I believe, in leg C. If it doesn't make a new high over 75.88 by tomorrow, then maybe it'll do it next week, and that'll take it to D. What can you say? IYC is the consumer cyclicals. All-time high as we speak. Leg C, leg D, 85, 86. Leg D right as we speak. There. MACD is very strong. Stochastics at 98%. Now, all these 98, 96% stochastics, at some point they're going to go down to 20%, down to 10%, down to 9%. So there will be a turn down. When is the issue? And how deep is the issue? Meanwhile, the IYC is in leg C in the weekly. That says it still has to go to D, still very bullish. And then it has to go to leg D in the monthly has already begun. iShares Dow Jones U.S. Consumer Cyclical Trust. I used to have it all typed in what they were, but I think Costco is one of them. Well, I don't remember offhand. I should have it right in front of me. I've got them all. I must have printed it out 200 times. I can't reach it. Okay, so that's the IYC. Bonds. Bonds are trying to form a little bit of a base here. My suspicion is that until the market starts another pullback, bonds will be just now in a sideways trading band. And because of that, it says that the whole area of the 125s to 120, even 120, could even give back, go to 122s. That would say to me that the recovery should take it maximum to 129 to 132 if it does that. And then we're going to see, are bonds really, US, has the bond continuous contract made a peak F top, peak E top, peak F in the weekly, peak E in the daily, and is this a hat trick top in the monthly? And in fact, we've just seen the all-time low in the yield as the bonds are going to pull back for quite some time? Or is this just a high-level consolidation as a Japanization, my mantra from way back 10, 12 years ago, maybe more, of our Japanization of bond yields, U.S. bond yields? If that's going to come about, we could just stay in this area for a while. In fact, shorting could only be short-term. And even at this point, buying is only short-term because it's just stuck in a range. But of course, a very nice move in bonds going from the 143, say, to back to even 148. That's a big percentage. That's capital gain plus the yield. So, all right. Now the dollar. TXY, remember I said trading band. Yep, there it is, trading band. Boy, is that a trading band or is that a trading band? And right at this particular point, I don't even want to make a fuss about the dollar. I just don't think the dollar is on the radar just right in this particular period, maybe another week or so, and then maybe it'll break up or down. This pattern usually breaks to the downside in the daily, this rectangle formation, unless there's a spike to the upside. But even an upside says this area is becoming a magnet area. So you can spike up, but you're coming back down here. You can spike down, and then this will become resistance. So now we want to look at a question that I don't know if it's a question, but I just saw it go by. ABX. Yeah, look at that. ABX acting very well. ABX is Barrick Gold trading at 12.86, up 64 cents. There's that rectangle formation. I was just talking about it in the dollar. And in bonds, look, there's a rectangle formation. It's just trapped between the upside and the downside. Resistance in the 1325 area, and support in the 1195 area. And if it's able to hold and then break above 1325, that starts leg B in the weekly chart. That'll be very positive. First, really positive. First, very positive sign in Newmont Mining and Barrick Gold in a very long time. NEM was the next one that was mentioned. Yeah, there it is. I even drew it in. I drew it in weeks ago. I said, there's the rectangle formation in Newmont Mining. Should be trapped here for a little while. But being trapped in this particular instance might be a good thing, because it could be saying that gold is just going to be, it's going to find support in the 1180s, something around there, and that it's getting ready for a nice bounce come when the market starts to pull back in March. That's my thinking anyway. And I'll be discussing that in great detail Wednesday. Let me just show you right now one more time. Right there. Go to the front page of TFNN. That's what you want to do. Tonight, that's Andy Heck's webinar. 1929 market, then and now. And let me explain why. I think timing is perfect, because this is the period right here, the inflection point. If there's just a minor pullback in March and then we break out and the Dow starts to track 18,500, something is happening here that then begins to parallel patterns that will suggest we're going into the acceleration phase right now. We're not going to have a pullback, so it's worth attending. So now back at the ranch. Yes, exactly. Oh, SPY leg C. What was the question? SPY leg C was a big exclamation point, and then yeah, SPY leg C. Remember, that was an aberration. I usually TradeStation will correct a problem like this. Very unusual for them not to. So I don't know how could there have been trades up at the 1200 or 212 area. What was it? 212.97 on the 18th of December. I did not see that. I mean, now who in their right mind, unless they put some kind of a buy stop or a buy or something just from years ago and put it in and forgot about it, and someone just triggered it at some crazy stage of the day, it's really unusual. And if when I went back and looked at the 120-minute chart, what date was that? The 18th, I don't think I can go. Oh, I could go back that far. I just don't know if I want to right now. 18th? No, I'm not going to go back. You know what? I will go back. Right here. So we want to go 80 days. Oh, I don't like doing that, but I will. 80 days. All right, here we go. Click. Click. There it is. Oh, so there was a movement there. I don't understand it. All right, well, that's an aberration. The real high was not that at all. So I have decided that I've got peak A right there in the weekly chart, right there. Peak A is at on the SPY, the S&P trading vehicle, SPY, the week of the 5th of December at 208.47. Then I've got we didn't make a new high the week of the 19th of December, but we've got a new high at 208.97 the week of the 1st of January. And then we're in leg C. And that says you're going to have to now put this together. You've got this as leg C. If tomorrow is a down session, that means that Monday, Tuesday, or Wednesday is going to make leg D in the daily. If it makes leg D in the daily, it extends the weekly leg C. See, do you understand how the time frames are so important in the Chapman wave? How it took me years to develop this whole concept when I found it by pencil with hand charting on closing prices only, just the dots, and then I joined the dots because having just broken above 208.97 starts leg C. If next week we make another new high, that continues leg C. I can't get D for 2 weeks. Hey, I'll be back. Basil Chapman, straight after this break. Dow's down 13.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Folks, I can't even remember if I said it. There's just so much information going around here. I'm going to be doing Larry's show. So I'll be here for another hour after this. I just found out that Larry's away, so I said, okay, I'll take the time. It's my pleasure to do this, and I love looking at the charts, so I'll be back. So a couple of questions about that strange trade that went on the 18th. New York Fed chairman, I don't know, it just... whatever it is, there must have been a price point that was hit. Whether it was just old stuff sitting there and somebody just decided to take it out. It's strange. I mean, the S&P would have to move. The Dow would have had to move 200-something points. The S&P would have moved 20 points to go those 2 points higher. That's just in the SPY. So that doesn't make sense at all. But it must have been there because TradeStation is scrupulous about their data, and they've kept it. And normally I'd refresh and get rid of the spike, and that's that just weird candle. So I have to ignore that candle. That's all. So a question about two things. One is Amazon. Oh, so I'll be doing a Larry show in the next hour. So peak D in Amazon holding very well, forming this kind of pattern at the top that says, hey, I'm acting well. That weekly chart still looks like I have to call it a leg B, and the all-time high of 408.06 makes a U-shaped pattern, just as the chart we looked at before that I said the H pattern has become a cup formation. So you could say the same thing as a potential about Amazon, and that's suggesting that we could have a pretty good couple of weeks here. If that's the case, this is, what can you say? At these levels, you say, we should be turning down, but I just want to stay with the trend as long as I can. And so far, it really does look as if you've got this rotation kicking in. PANW, I don't know if I've updated that recently. No, I haven't. Oh, man, this is Palo Alto Networks. What a beautiful looking stock. A, B, C, leg D in the monthly. I have this all done. I don't know why I've lost the data on these charts. I just don't know. Other times I can understand it. Now I've not had any problems recently. So A, B, C, D, E. A, B, C, D, E, F. Well, it's either recycled in the weekly or it's in an F. Maybe it's a B like all the others. I'll try and do that during the break. And yeah, it's just acting beautifully. It's at 138.64 PANW, up $1.76 at up 12.9%. And it looks like the support is at 138.64. Support's in the 133 to 131 area. But so far, the stochastics are 92%. And it's got the pattern that I call the squash. This really looks like an ABCD. This could be a brand new ABC, leg C. That's what happens. In a chap wave squash formation between the stochastic and the MACD, this particular pattern takes you really quickly to a peak C. And then you can stall a little bit as the stochastic pulls back, but the MACD's fast-moving average keeps up the momentum. Torque from the stochastic, momentum from the MACD's fast-moving average. Wow. So we're just about to go to the end of the show. Let me just run this in case some of you are not staying. So the Dow has a very nice move. It went to the 17,920s, 9-period exponential moving average. The day is young, but so far it really looks nice. It's sprung off that, and it's looking like it wants to get to leg C above 18,052.01. Maybe by tomorrow, we'll see. 120-minute chart. Yeah, acting pretty darn well. And 18,103.46 is needed to go to leg D. My thinking is still that it might take until next week. That'll be quite interesting. So that's the one thing. And the VIX, so the support, if it breaks today's low by tomorrow at noon, that's just not good action. It means you're going to take a little more time out. So in the VIX index, just keep watching the volatility index, pulling back against under the 200-period moving average. It's at 1519. In the 15s, that's good for the market. Hey, I'll be back in just a few more minutes, and I'll be back with Larry's show. I think I missed a peek. You did. Okay. Thanks for being here, and I'll be back later.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.